Futures moving to the upside. It's looking to regain some of that momentum that it lost yesterday. The Dow coming off its worst day of the year. Now the move lower yesterday coming despite the fact that Nvidia once again posting another record-breaking earnings report. It was not enough though to keep that market rally intact. So here to break it all down and where we could see maybe pockets of strength going forward, we want to bring in Keith Lerner. He's Truist Co-Chief Investment Officer and Chief Market Strategist. Keith, it's great to see you. So talk to me about how you're looking at some of the losses that we saw yesterday and whether or not the narrative surrounding Nvidia and some of that excitement has faded just a bit when we talk about the broader market action.
Yeah, well, first, Shauna and Brad, always great to be with you, especially ahead of this long weekend. Hopefully you guys get some downtime as well. Our view is this. First of all, we did upgrade equities in late April when we were down about 5% because we thought the risk reward had improved. Now we moved up 7%. Expectations into that Nvidia print was really high. And it almost seemed like the anticipation of this report felt like a CPI employment day. And if you know, you have been doing this for a long time, that on those days, regardless of the number, the market often acts differently than you would expect. And I think that's the case yesterday. But I also think what's kind of happening now is that we're moving past earnings season. One of the most steady things in our work has been forward earning estimates have been moving higher. But now that you move past earnings season, the market has to now start focusing again on what is the Fed going to do and inflation and each economic data. So that just makes for a more volatile market. Our underlying message is we still think the primary trend is higher. I think near term, the market will be searching for a catalyst, which likely means that we're in more of a choppy period after that 7% rip up. But again, we think the primary trend is still one that is positive.
What do you think is that next catalyst that could emerge, Keith?
Well, I think, first of all, we're going to go through the summer months. So even just kind of going through just back and forth is actually, I think, fine. I think the catalyst for the market is probably to start seeing more disinflationary pressures, which, as Shara just mentioned, we got almost the opposite of that yesterday. So for the market to actually move higher in a meaningful way, we likely need rates to actually break below this 430 level on the 10-year Treasury, and the market get more comfortable about that there's more disinflationary pressures that will allow the Fed later this year to at least cut once or twice. I don't think it matters if it's June or September. I think the most important thing for the market is that it's more likely that they cut. If the message really starts to change that they have to raise rates, which is not our base case, I think that would be the biggest concern for the overall market.
Keith, are you seeing any signs of exuberance in the market at this point when you take a look at valuations and where we are today?
Well, so I think there's some signs, just even the last week or so. I mean, we saw some signs as far as the meme stocks. We saw some strategists on the street really just lift their targets, pretty meaningfully in a short period of time. If you look at the options market, there's almost no demand for downside protection. So I think that's more of a shorter term. I don't think it's exuberance. I just think that it's one of those things where when you have those type of things happen, it's not unusual to have a little bit of a gut check in the overall market. And that's what I think we're having. And I also think, listen, when we get back from Memorial Day, you get into June, you're going to start seeing the presidential election. And I think people are going to start focusing on that. That's going to add another dynamic as far as just this kind of more of a two-way trade, even within that uptrend that we still think is intact.
When there are those pockets of volatility, Keith, where are some of the top dip buying opportunities emerging from your purview?
Well, I actually still think that tech and communications is still leadership. In fact, yesterday, one thing we look at is relative price momentum and relative trends of each sector to the overall market. And what we did yesterday after the Nvidia print, which makes sense, is we broke out to an all-time high after consolidating. So what that tells us is tech remains leadership. We've been overweight. That reaffirms our overweight. The other thing that we look at is the earnings momentum for the overall sector is still much stronger than the overall market. When that happens, historically, tech remains leadership. And I will say, if you look into the surface, while the S&P broke out to new highs and we're still positive, below the surface, we didn't see the follow through from mid caps or small caps or some of these interest rate sensitive areas. So we would really be focused more on that large cap space and really still like tech and communications as two of our favorite sectors.
Keith, as we look out to next week, we're also going to get one more big earnings report here coming in the form of Salesforce. Now, Nvidia has also been called, they've already been dubbed the de facto AI play by Goldman, but is Salesforce almost brewing as maybe a de facto junior as it relates to some of the software services side of this business and the elements that can immediately kind of be tangibly touched within workplaces?
Yeah, I think that's fair. I mean, I think the Salesforce, you think about Oracle. What you want to see is the AI benefit accruing beyond, one big company, right? And I think that from a market perspective, you do want to see it broaden out to be beyond that. And if you had something that was really weak there, then again, I think on a short period, tech is the biggest sector that could weigh on things. But overall, I still think if you kind of zoom out a bit, our perspective on artificial intelligence and also the earning trends, I think as far as the spend on that is, we're still pretty early cycle. Even if the economy slows down, even if there's all these uncertainty, I think companies will have to continue to invest in AI and tech. Otherwise, they're going to be left behind. So I think there is a tailwind, bigger picture. But as you mentioned, I think in a week, next week, as we winding down earnings, that will be an important report.
Yeah, even as I'm sitting here previewing Salesforce's earnings and calling them de facto junior for AI, I imagine the Meta platforms and Microsoft are somewhere saying, hold my beer. We've got a lot that we're doing in this area too. Keith Lerner, great to see you. Thanks so much for taking the time.
Great to be with you. Take care.